Hi, I'm Diana Giselle Yanez, host of Highly Sensitive Money. I'm a money coach, certified financial planner, and a highly sensitive person who brings money and social justice together. If you're someone who feels deeply, can endlessly think through how one decision affects everything else, or has ever struggled with all the things that traditional financial thinking leaves out, you're in the right place. In this show, I chat with highly sensitive people on how they handle their money, and with money experts on how they cultivate social justice in their work. Questions? Please go to allthecolors.net and schedule a free 30-minute call. And I'm happy to share resources on investment management, money coaching, workshops, or anything else money and social justice related. Join us in this episode as we explore money and sensitivity while honoring that all of our well-being is interconnected. Today, I share a conversation with Tony Steuer, a financial preparedness advocate who started his career analyzing insurance policies with pure mathematical precision, only to discover that people's choices rarely follow the logic of spreadsheets. Through his work, Tony came to understand that beneath every financial decision lies a web of emotions, family dynamics, and deeply personal stories. He shares how, as a highly sensitive person, witnessing financial predators target underserved communities like widows and people of color ignited a determination to empower people through curiosity and education rather than shame. This episode explores why asking questions matters more than having all the answers, and how sensitivity to injustice can become a powerful catalyst for change. Welcome, Tony, to Highly Sensitive Money. It's a joy to get to interview you. Last time we saw each other, you were interviewing me, so this will be a fun turn of the table. Thanks for being here.
Yeah, thanks for having me, Diana. I've really been a fan of the show and some of the guests you've had on. It's a great way of presenting ideas.
Yeah, and we've connected through LinkedIn as fellow financial professionals, and I know you're very supportive of diversity, equity, and inclusion. I feel like that's the first place that we connected, but I would love for you to take the time to introduce yourself and the work that you do.
So I started out quite a few years ago doing fee-based insurance consulting, working mostly with financial planners, did some litigation consulting, worked with trust officers. And over the period of that time I found that people didn't really understand what they were buying, which got me interested in the financial literacy component. And then what would also strike me is that people would make decisions that I didn't understand them making, and the advisors didn't understand. There were situations where we'd figure it was really black and white, the decision to make, but yet the clients would have other reasons, known or unknown. So that got me interested in the whole concept of behavioral finance and applying psychology to money. And that unlocked the whole concept of emotions and money stories and all those other factors that really drive the majority of financial decisions beyond what we do. And then over the course of my podcast, I was lucky enough to have had a lot of guests like you who've really introduced me to a whole new way of looking at equity and generational wealth and all of those issues. And that really compelled me to really rethink it. I've always had an advocacy mind point for best practices. And I think it's that we need to take a best practices approach to thinking about equity and representation.
And there's two important points that you're pulling out there. The first one was when you saw that people's decisions were not like money looks like math, right? It's got numbers in it. Yeah. It just looks like obviously this is the right answer. And you were seeing people not go with what the right answer was. Right. And that led you into the psychology aspects of money. Let's stay on that topic first, and then we'll move into the equity one, because the equity one will bring us into social justice. So cool. Let's stay on the behavioral one first. What were, as someone that's had maybe a very traditional background in finance, what was it like when you were first opening up to behavioral psychology and behavioral money decisions?
It was more of what's going on here? So in college, I was a finance investment major. So I had the very traditional background in the money world where it was all internal rate of returns and yields and present value and all those things. So it was all mathematically driven. And I became a life insurance analyst, which is a special license in the state of California that allows you to charge a fee. But really, the bulk of my job was deconstructing existing insurance policies and analyzing them. So again, that very numbers driven aspect, black, white, yes, no, that not a lot of gray area in terms of that because I'm measuring performance and everything else and companies' financial strength ratings. And where it really opened up with me was that a lot of the financial advisors I worked with were wealth managers. And so they had very established clients who were running businesses or attorneys themselves. So they were educated people. They were people who were able to understand all the concepts. So it wasn't a literacy issue anymore, is because they fully understood the issues. So then the question became, okay, they understand the issues. They're smart people. So it's not a education issue, which is where the financial literacy movement is currently stuck at, and why we're not seeing a change in financial literacy, which is a whole different topic. So sorry to go off in that route, but it really it started me to think about, okay, why is this problem not being solved? Why are these clients making these decisions? We can show them something where it's like you could save tens of thousands of dollars by making this move, but that had nothing to do with it. And so that really got me interested in that behavioral finance. Okay, what is holding the client back? What else don't I know? And it refers to that. I think it's, oh gosh, there's a window, and it's the things you know that everybody knows. Then there's the window of the things you don't know, but everybody else knows. And then there's a window and so on. And so I started thinking about, okay, what don't I know that others know that I need to find out? And in order to serve my clients, I had to figure out what they knew and what I didn't know about them. And that's where I really became interested in the behavioral finance aspect.
Is there a story you could share of like maybe this example of someone could save tens of thousands of dollars by making this different decision with their insurance, and then how understanding their behavioral psychology, maybe learning how to make better questions or deeper questions, then eventually led you to find out what the right solution was for the client? And maybe the client chose that they didn't want to save the tens of thousands of dollars, right? They decided that something else was easier.
Where I really see this a lot is people buying whole life insurance policies. So this isn't a specific client story, but it's more conceptual because we're seeing a lot of these schemes called the infinite banking concept, be your own banker, and so forth. And people get psychologically enamored of these things. They think that they can outsmart the insurance companies. They think they know something that nobody else knows. And so they get into these products and they've poured in, let's say, $5,000 a year in premiums. They're 10 years down the road. They don't want to let go because they'd have to take a loss on it, which we know from our investing background is sometimes you're going to take a loss on certain investments, but people do not want to take a loss on their life insurance policy. So you can show them that even if you go out 20 or 30 years, they're not going to be effective vehicles. They'll still say, you know what, I need the life insurance. You could get a term life insurance for 1/10, 1/20th of the premium and put the rest of this money somewhere else. And pretty much you could put it in T-bills. Okay, so I'm not an investment advisor, so it's not investment advice, but you could put it in T-bills and do better than putting it into this life insurance policy. But people will hold on to these things because they get wrapped up in I can be my own banker, I can do all these things, but that only tells part of the story. But that is the psychological draw that I saw with life insurance policies.
So it's a little bit of that sunk cost fallacy, right? That they've already put $50,000 into this policy, letting it go. It feels too maybe dissonant, too painful with their viewpoint of themselves. Yes, I understand. And I understand how people might really buckle down on this decision that they made 10 years ago, even if it's not bearing fruit. Okay.
And it's even made amplified by the fact that a lot of times life insurance is sold by friends and family. And so that you add that dynamic to it where they're like, oh, I'm going to have to see cousin Fred at Thanksgiving, and I don't know if I can let go of this insurance policy because you know the story, it goes with family dynamics.
Cousin Fred might still be getting a commission off of that life insurance they sold you 10 years ago. They might still be getting like a trailing fee.
Exactly. And life insurance is an odd product is people don't view it a lot of times as a financial transaction. And the insurance industry has done a very good job at marketing it for emotions. And so people don't look at it and say, okay, this is just a financial contract. And we need to look at it from that perspective.
Yes, yes. And I know that there's a huge history. This is bringing us over to the second point that you had made at the beginning of our introduction about advocacy being really important for you as you've been doing your podcast, as you've been in the industry. And insurance has had very many like negative interactions with communities of color.
You know, I can speak to that a little bit. Is what's happened is traditionally there were insurance products that were sold in poorer neighborhoods. It goes way back to these policies. Oh, the name is escaping me, but where people would actually buy these whole life insurance policies, very expensive, these burial policies, and agents would actually go weekly to collect the premium. But that was only in neighborhoods where it might be people of color, immigrants, people who didn't have as much formal education. They had lower amounts of wealth or basically no wealth. And so the insurance companies came up with these burial products that on a cost per $1,000 of coverage were very expensive. But to these people, the policies became very important. Yeah, those immigrant neighborhoods and the people of color that lived in the poorer neighborhoods were definitely targeted by insurance companies, but not only insurance companies, as unfortunately all financial service companies have had predatory tactics towards underserved communities. We can look at credit card companies and the rates they charge for underserved communities. Unfortunately, it's a story of financial services.
Yes, you're right. It's across the entire industry. And speaking to like the credit card point, it's like the zip code that you live in will give you a higher interest rate than other zip codes. And we know how that traces back to redlining. I don't know if I can say this is 100% true, but I remember hearing that the start of insurance actually had to do with cargo ships that were moving enslaved people from one continent to the other.
Actually, I think that might have been more with Lloyd's of London, but the concept of insurance actually goes back even further. That it goes back to that concept of if a house burned down in the village, everybody would pitch in to build a house. But yeah, I think Lloyd's in London, that it had something to do with merchant shipping. I don't know if it was enslaved people or not, but I know that was one of the earliest types of insurance. See, there's my analytical brain. Cutting it.
Yeah, wanting to really make so like, how does this all tie together? And I've heard tons of horror stories. My grandmother actually had a very bad experience with an insurance that she didn't really understand, and it was sold by a neighbor, and she paid premiums forever, and it lapsed when she turned 65, and she thought it was like something for retirement, when it was actually the opposite. And there's just this, it's a level of financial illiteracy, but it's also predatory practices.
And I've seen some really scary things. Is I served for almost a decade on the California Department of Insurance Curriculum Board, overseeing licensing and education requirements for insurance agents in the state of California. So I got involved with some very ugly situations. And a lot of times, predators prey on people who have less access to information and education, is because they're more willing to fall into some of these things. But on the flip side, anybody can fall prey to predators. So that's something to say. So just if you have a college education, it doesn't mean you can't fall prey to scams, because you can.
And the information asymmetry, the fact that as the as the financial agent, I know more than the person that I'm selling things to or that I'm advising. It's really important. It's a really big part of this component. I often tell clients that as an investment manager, it is my job to make things easy to understand for my client. If my client doesn't understand it, it's on me. Like there's nothing that I'm offering clients that is that incredibly complicated. And I'm not offering hedge funds. I'm not offering options. If the person isn't understanding it, then maybe there's something fishy in the product, or there's something fishy in the person that's not explaining it in a way that's transparent.
Yeah, 100% is the way I did it is I want to make sure that somebody could explain it to someone else. So I would just ask somebody, repeat back to me, what do you understand? What do you think I said? What do you think I'm recommending? And that would give me a gauge. Okay, are they really getting it or not? Because it's easy as professionals. This is something we live and breathe all day. You're a CFP. You went to school for this stuff inside and out. So it's pretty easy for us to get tripped up on something like, for me, thinking that everybody knows what a premium is. Surprisingly, not everybody knows what a premium is. And if we're not taught that in our homes, and this gets into the generational wealth thing, that if our families haven't dealt with money as maybe we're the first ones in our family to have a 401k and all those things, that we don't even know what we don't know.
Definitely. As we go along in this topic of like financial literacy, that then for you became interest in like behavioral finance, and now also it's evolved to include advocacy. I'd love to hear how your journey became more focused on advocacy and social justice, especially as it relates to your podcast and the information that you were learning.
So I've always had an interest in consumer advocacy. I actually I was at a consumer advocacy firm for about a year in their preparedness department, but I saw some really bad things doing litigation consulting, and that really got me interested and inspired to help people with their things, is especially when you see elder financial abuse and you see somebody losing a significant part of their life savings with financial predators. That got me interested. But then when I started having guests on like you, but I can think back to one guest, Fong Long.
Yeah. And I'll make sure to include her in the show notes.
Fantastic. Is she really got me really rethinking this when I still remember her conversation, is in thinking about the access that people have to education, let's say. So if you have a household that's poor and there's only one parent who's working and they're not home, is there's nobody helping the kids do the homework, so the kids aren't doing as well in class, or if the kids don't have access to healthy food to eat when they come home from school, that they're going to be at a disadvantage. So they're going to have a harder time learning. They're going to have a harder time getting into a college. So that a lot of us operate on, like, I come from a stable home with two parents. I come from a stable home where I don't have to worry about taking care of my younger siblings or helping out my grandparent, because I don't have to be a caregiver at the same time that I'm a child. That type of generational thing has a huge impact on somebody's life trajectory, because in college, maybe you get a boost towards your first job, or you make some connections to use, because a lot of the business world is about your connections, without a doubt. And so you have that. But then the thing that really just shocked me to my core, that I'd never really thought about, because I come from the San Francisco Bay Area, I thought women were exactly equal to men, but they're not. And what I mean by that is in terms of what they earn, which is the gender pay gap, which is what we're all familiar with. But what we're not familiar with, and what doesn't get talked about, is the pink tax, where women pay more for a lot of products that they use that are identical products to the product that men use. And some of these are, let's say, personal care products, is they cost more for women. That adds up. But then the biggest thing that I hadn't thought about at all is time missed from the workforce as a caregiver. And we all know that women may take a couple years off to raise kids, but what some people don't think about is the time off that women take to be the primary caregiver for either their parents or their spouse's parents, or maybe even an aunt or an uncle, depending on the culture, is that we don't think about that. And so when a woman has time taken out, is maybe she falls behind on her salary increases, or maybe she works less hours, or she just doesn't have as many hours put aside to go towards her retirement plan. And then it's exacerbated by longer longevity. So you have women retiring with less money, they've made less money over their career, and they're going to be living longer. And for me, that became a huge thing. I've always been like one of those people. I want everything to be fair. I want everything to be just. And integrity is super important to what I do. And when I start really understanding these issues, I'm like, wow, it is really set up. The system is set up against women. And some of those issues go towards people of color. For here, just sticking with the concept of women it's just like, we can't expect women in the financial services industry has lectured at women for years to do this and do that. And it's, wait a minute, they're not even on the same playing field. How can you expect them to make the same choices?
So I'm hearing that you had Fung come onto your podcast, the Get Ready Money podcast. And also the origin of that podcast seems to have been your desire to bring about financial literacy, your desire to show people how to get ready for different events. And having Fung on as a guest then opened your eyes, your concept to the unfairness for so many different groups. And what you're talking about, women, it's, yes, I've heard it all before. I know it all before. At the time you take off for caregiving, the fact that you're paid less from the get-go. I think for Latinas, it's actually the biggest wealth discrepancy. From what I remember, Latina gets paid 53 cents on the dollar that every white man gets. And for women on the whole, I think it's about 80 cents. So it's a very real pay gap. And then all of the caregiving time, and the longevity. Yes, it's three very big things working against women that we can also change policies for. We can change how this is working. So after having kind of your eyes, what did that change inside of you? Like seeing this discrepancy, specifically seeing on the topic of women, what did this change inside of you?
It made me curious. I like to learn. So I wanted to understand the issue better, but it didn't really become a mission to me for a year or two after it really sunk in. But I had on more guests who could expand upon the topic, including yourself, but a lot of female financial planners who really broke down the issues. But I had on some divorce coaches and people in the caregiving field. And I've had on some people who talk about scam, and I'm going to get much more into financial abuse, which unfortunately mostly falls, or physical abuse, which leads to financial abuse, and physical abuse usually is aimed at the woman. So again, another thing, and this is all part of my learning because people have been generous enough to come on my podcast and open up about their stories, which is amazing that I've had so many amazing people who've been willing to come on and open up about their stories and talk about these issues. And I feel that it's the least that I can do is to spread the word and to help change things, that it's not enough for us just to think about something or to talk about it conceptually. It's, if we want to see a change in the world, we actually have to go out and do something. And I think the best way I can do it is to, one, go on other people's podcasts like yours, but to continue to platform guests on my podcast who are going to talk about these issues so that other people can become aware of them. And I think that's how we can make change.
That's how you've chosen to really focus in on your advocacy, your work for social justice. And one thing that, like, for people that are listening to this, I'll have this in your show notes, but your LinkedIn. I love how, I believe it's every week that you go on there and you highlight 10 things that you've heard, either on other people's podcasts, other people's articles, of just things that were surprising to you or that you wanted to elevate. I'd love for you to talk a little bit more about what got that started.
Well, part of it, what got me started is just people asking me, like, I'd mentioned an article or a podcast or something that I heard, and people are like, where are you coming up with all this stuff? And I'm just like, I just have varied interests. So yeah, I decided to compile it. But part of it is I'm purposely not listing usually the big names. Is usually I'm trying to list people who are doing what I think is really interesting work that doesn't get a lot enough sunlight, for lack of a better word. So that's a big part of it for me, is thinking about who's doing really good, really important work that I can help boost up. And so a lot of the people that I list, their content are women and people of color and other voices that are not the mainstream voices. Because for those who are watching and listening in the financial services industry, we can name, probably all come up with the same 10 names who are considered leaders in the financial services community, and they're mostly going to look like me. But that's not our communities. That's not the real world. And so this is, again, the newsletter is part of that. Okay, how do I showcase people who are doing really good work who are different than me?
I'm hearing you highlight people on like the leading edge of thoughts, and especially around things that most white men financial service providers may not be thinking about or considering. So I'm seeing you advocate to your tribe.
Exactly. It is an advocacy. Part of it was motivated by learning about scams and frauds, that it is the same thing, is because widows fall prey to financial predators. Financial predators are attracted to widows like flies to honey. And so the part of it is, from that initial desire to help fight scams, is to help women become financially educated. But it's not only financially educated, it's to become curious and empowered. So it's not the education, it's understanding when and how to apply the knowledge and to feeling confident in the decisions. And I think that's the thing that I hear, is that a lot of women feel like money is not for them. They feel ashamed, they feel judged. And all of a sudden they're 50 years old, they're a widow, or they're divorced, and they have to take care of their money, and they don't know what to do. For me, that's a hugely important issue.
So as you know, this podcast is focused on social justice, on money, and also on high sensitivity. And one of the ways that high sensitivity is defined, my favorite definition actually has an acronym, that's DOES. D is for depth of processing, that you see maybe one problem, but you also see all of the tendrils that might be attached to that problem, right? Okay, yes, women live longer, and that's why they need more money. And what are all the things that are included within that, right? What are all the reasons that they may not be prepared for that? That's the first one, D. The next one is O, a tendency to become overwhelmed. So that O is for overwhelm. And that might just be because you see so many different connections, that might be overwhelming. E is for empathy. It's the depth of empathy, the depth of emotional processing. I was literally just talking to a coaching client, and she was telling me, like, if others are not doing well, I'm not doing well. So there's this really deep level of porousness that can sometimes be debilitating, especially when we see so many negative things happening in the world, or so many negative things happening in our own community. That can be really debilitating. And the last one is S for sensitivity. This is sensorial sensitivity. Like, it's too bright, it's too hot, it's too cold, it's too loud. It's like whatever those, like, because you have these, you're more likely to bring in information. And highly sensitives are 20 to 30% of the population, depending on how you measure it. They're often considered like the canary in the coal mine, that they're the first ones that'll see that something's off. And the canary in the coal mine is the first one to kind of drop, right? The first one to be negatively affected by it. So that's the hard part of it. But it's actually, I believe, across hundreds of species. So one of my favorite examples of this is that whenever they're counting certain type of fish or certain type of deer, whenever there's sensors for it, the highly sensitive fish and the highly sensitive deer will see the sensor and they won't touch it.
Really?
So researchers know that they have to add 20% to the population, right? If there were 50 deer that touched it, there's probably 70 that were there. Because the sensitive ones, like, they don't know what it is. Why would they touch it? Like, so there's this level of apprehensiveness that's very common in the sensitive community. There's this level of overwhelm, but there's also the beautiful level of seeing the connections across people and sometimes having a lot of you keep talking about curiosity, right? Like wanting to know more about the concept. As I'm describing high sensitivity to you, I wonder what's coming to your mind.
Oh, that I'm definitely highly sensitive. I think we were talking about that pre-show that I wasn't 100% sure, but I would say definitely. And it's interesting. I'm reading a book by Dan Brown, his latest. He's the author of The Da Vinci Code, but his latest book is about consciousness and how we're all connected. And when you were talking about the fish, is it really made me think about that it's about being tuned in to what's going on. So what really started driving me was seeing the scams and seeing people affected, but it really bothered me internally. And so I had to figure out how to deal with that and to help other people at the same time, but also seeing somebody taken advantage would really make me angry. And yet you can go to court, you can have their insurance license taken away through an enforcement action with the Department of Insurance, but you can't really ever make a victim whole because they'll always have that memory of being taken advantage of. For me, it was like, okay, I'm feeling this. And it can be overwhelming when you start thinking about and seeing all the times that somebody's been scammed. You read about another scam, cases come through. At the Department of Insurance, California Department of Insurance has the second largest law enforcement arm in the state of California, but yet it is overwhelmed by the amount of cases that the investigators have on their plate. And that's all the bad stuff that's going on. So it's, okay, what do you do with that? How do you take action? And then, as I mentioned, is thrown into that is the fact that it's not just elderly people, that it's women, widows who are more susceptible to financial fraud, divorcees, people who come from underserved communities, immigrants, seeing them taken advantage of financially is because they're taken advantage of by people who prey on their communities because they don't speak English. So they trust somebody who's from XYZ financial services company who speaks their language, who comes from their community. So I've seen that several times where somebody will say, this is somebody from the XYZ Cultural Center, sort of fudging on the name a little bit, but I hope everybody knows where I'm going with that. And they say, I trust them because they know how to speak my language. They're part of my culture, and I know them from here. And so that really did get to me like, okay, either I can still continue to have these feelings or I can take action against it and try to not only help myself deal with these feelings, but to help others to not become victims themselves.
I love that. I love that. And I think you might be like the third person that has come on the show and been like, oh, I am highly sensitive.
Well, I'm sure.
And it's true. It's like you see these problems, and the gift of high sensitivity is just that porousness. It feels so present. Yeah, I love how you've taken that anger and really taken action on it through the financial literacy work that you're doing, through your ongoing advocacy work. So I wonder if you could have a magic wand and fix the scams that are happening specifically in the insurance community, specifically the place where you have the most expertise, what kind of things would you want regulators to put in place?
I'm not sure there's anything regulators can put in place. I think that it all there are a lot of things that regulators can actually put in place, but I want to flip the question because I think it really has to come from society, that we teach people and we encourage people to be curious and not shut people down from being curious and asking questions. And then we understand that it's not about the emotion. It's not about the numbers, that it's about the emotions and it's about the background and the feelings. So the regulators, the problem that I saw at the Department of Insurance is that the regulators are always playing catch up. And that no matter what the regulators put in place, there's always somebody who's going to come up with something new that the regulators can't possibly anticipate. And that's probably the biggest challenge for a regulator, is to come up with anything, because there's always going to be somebody coming up with something new that they haven't anticipated, and they can't regulate until a regulation can't go into effect until somebody thinks of it. And if somebody outside the regulator comes up with something, then the regulator has to react. And most of our regulators, for anybody who's dealt with regulators, know that a big part of what they do is react. And they're constantly reacting because they can't anticipate everything. So maybe if I had to wave a magic wand, so I'll stop avoiding your question, if I had to wave a magic wand, maybe that they could see into the future and anticipate, because that's the only way that it's going to change.
Wow. That really makes the problem. It like positions the problem in such a huge way that there's always new things that are happening. And I find that for all of the phishing scams and like everything that has to do with finances, there's always a way with many different parts of our life, right? There's a way that people can be taken advantage of, is what I'm hearing. And I'm hearing you say that what as consumers we need to have is curiosity and also the empowerment to ask questions, to understand before we sign.
Exactly, to be scam aware, to know what red flags are out there. But the big thing is to take away the shame of money and money conversations, is because people don't want to say, I don't know this. And I think that's the biggest thing as adults. We think back to our time in school, and you didn't want to be the kid raising your hand saying, I have no clue what you're talking about. When probably all the kids in the class have no clue what the teacher's talking about, but you sure don't want to be the one raising your hand saying that. And we carry that over to our adult life with our money. And we don't want to be the one saying, even to our financial planner, I don't really understand what a stock is. And the investment advisor is going through, you need to allocate 20% here, 20% there, and blah, 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 small cap, big, large cap, and all this stuff. And the person's sitting there going, why would I want to own stock? And so that's the big thing, is like helping people be curious, but also to say, I can ask this question and nobody's going to think that I'm stupid if I say, I don't know what a stock is. And I'm just using that as an example.
So being scam aware, I'm hearing you say just understanding that like we don't know, as consumers, we don't know what it is that the person's talking about. I think of myself whenever I go to a doctor. I don't know what they're talking about. I don't know where my spleen is or what it does. Like there's a lot of things about this body that I've had my entire life that I'm not aware of. And it's the same thing when we're talking to a financial services professional. It's okay for consumers to not know.
Yeah, and it's something that I've said is that we need to think in the financial services business, we need to take a doctor's approach, and that we need to think about it that way, because we don't walk into a doctor's office and the doctor goes, hey, Diana, great to see you today. I got a special on knee replacements today, and I think you could use a nice knee replacement. And you're like, I got this headache. Can't you help me with a headache? And that's the financial services industry as a whole. And the other thing to what you're talking about is, so let's say you're having an issue with your spleen. Your doctor's not going to go into the history of spleens and here are the 5 different kinds of spleens and how they work. Your doctor's going to say, okay, here's what's going on. Here's what I think the problem is. They're going to ask you a lot of questions to get an idea of how you feel about it. And are you sensitive about it? But then they're going to get some objective data. Then they're going to make an assessment. And then they're going to tell you their plan, but they're not going to say, before you can do this, you're going to have to watch an hour video on the history of spleens. They're just going to tell you what you need to know and guide you through. And if there are options, go, okay, here are your options. If you don't deal with it, this is going to happen. You can take action A, you can take action B, or action C. And then they explain it, but only in the detail that you want to know. So if you're somebody who wants to know all the details, you can get them. If you're somebody who just wants to know the bottom line, then they'll give that to you. But that's the thing, is that you have to be in that way. And sorry, going on, because this medical thing is something I'm going big on this year, is that you have to be an informed patient, and you have to advocate for yourself in the healthcare system. So it's the same thing, is that we expect that our doctors don't know if we don't tell them something, and we have to do that with our financial service providers. We have to advocate for ourselves.
As we're coming up to the end of our conversation, we've talked about like where it was that you started, then moving into understanding the behavioral parts of it, how your advocacy has grown, your continued work in advocacy, your realization that you're highly sensitive, which I'm happy it happened here live.
Something new today.
It can be a big gift. It can be a really big gift. Thank you, Tony, for sharing your journey and where you started and where you are now, and what the advocacy work looks like for you now, especially when it comes to financial literacy. As we're wrapping up, is there anything else that you'd like to share with listeners?
I think the biggest thing is just to reiterate is that it's okay to say you don't know, that the strongest power you have is the power of curiosity. And if you're not curious about your money, you're going to end up with bad results. So you have to be curious, you have to be interested, you have to be engaged. And if something that sounds too good to be true, then it probably is.
Wise words. Well, thank you, Tony, for being a guest on Highly Sensitive Money. And I'm excited to hear what you keep learning about high sensitivity.
Yeah, thanks for having me on, Di. It's a privilege to be here with you today.
I'm grateful for Tony's advocacy, for the way he champions underrecognized voices, and his openness in sharing his own sensitivity. I'm especially proud to see how his anger at seeing scans became fuel for advocacy. Remember, as Tony so beautifully said, the strongest power we have is the power of curiosity. Thank you for joining me on Highly Sensitive Money. I'm Diana Giselle Yanez, and I hope this episode helped you see how money and sensitivity can work together while honoring our interconnected well-being. We have the power to create a system where everyone's needs are met because nature is abundant. If you found value in today's conversation, please take a moment to leave a review and share this episode with someone who could benefit. Your support helps this message reach more people navigating their own financial journeys. A thank you goes to Mike Schul for the music and Juan Antonio Nunez for producing. For more resources on bringing money and social justice together, sign up for my monthly newsletter over at allthecolors.net. I also invite you to schedule a free 30-minute call where we can talk about money coaching, investment management, and all things money and social justice. Until next time, remember that your sensitivity and deep thinking is your superpower.